All right, guys, what's going on? It's Eric here. So, what we're going to do in this video is going to be a really good one because what I'm about to do here for you guys is walk you through the exact steps on the alerts and how to pretty much recognize, pick and choose which ones that might be beneficial for you. I'm going to show you how I look at them and what helps me when deciding which alert to choose. And that way you can kind of get an idea of what to do when it comes time to, choosing the alerts that you want to use to trade. So, in this video, kind of pay attention to everything that I'm kind of going over. This will probably eliminate most of the mistakes a lot of you guys make as far as, deciding which stock to trade. Because having the alerts is great, but again, because there's so many different ways to trade the alerts, for some of you who are new, it might be kind of hard to decide which one to choose, which one you want to, trade, how you want to trade it, and pretty much overall profit on any trade that you take, especially with the alerts. So, what I want to do here is show you guys why the stocks move the way they move and what it means when they move the way they move. Because if you know that and you're able to see that visually, you can decide from yourself, is this a trade that I want to take? Is this worth my risk to reward? Because you could be wrong 9 times out of 10, but that one time that you're right, it's to the moon. So, being able to read that and see that on your own is something that I want you guys to be able to do. And you can see exactly how the alerts, will benefit you on a day-to-day basis whenever you decide to trade, whenever you have time to trade. But practicing it is very, very, very key. But this is probably the easiest thing you can practice when it comes to trading. And, with the alerts, you're able to see it in and out, in and out. But knowing what you're seeing is very, very important. So let's kind of go through this and looking at the alerts, how I pretty much approach them day in and day out, and deciding which 1 or 2, 3, 4 trades I'm gonna take throughout the day. Because you don't need to be all over the market. That means you're just lost, okay? So, without further ado, let's go ahead and get into this trade and take a look at it. All right, guys. What's going on? Let's go ahead and get into this trade. Excuse me. Again, voice is still covering, but I want us to go ahead and get into these trades so that you can, understand and start profiting as quickly as possible when it comes to these alerts. Okay. So I'm just going to kind of walk you through the tape of the alerts today to kind of show you the best way to look at them again. And it shows you how it makes it easier for me to pick and choose which stocks I'm going to trade when it's, maybe more than one alert coming through at a different time. Because you guys don't need to be caught up on every single alert. You need to pick and choose 1, 2, maybe 3 stocks that you want to trade and why you want to trade it. And you guys see me throughout the day. I might trade 1, 2, 3, 4. No, I usually don't trade no more than like maybe 6 trades within a stock. But that's because, again, I know my strategy. I know what I look for. You guys that, have the course, what strategies I use and stuff like that. But for you beginners and people who are just now getting to alerts, you're probably going through instances where you'll get the alert, you'll see that it goes up and then it immediately goes back down. You freak out, you panic sell, and then you see the stock run again. Or it might be an instance where you're trying to quickly get in and quickly get out and you see the stock keeps going up. Happens all the time. So what I'm trying to do here in this video is help you eliminate a lot of that confusion and guessing and things like that. Now understand, this is for day trading, and some of the ways that I trade is a little bit different because I have developed different strategies over the course of many, many years. For myself, you should be doing that on your own as a trader as well too. Now, this video is going to focus on what I look at when it comes to trading the alerts and why I'm not running around chasing every little, news catalyst alert or earnings report or volume spike and things like that. Because you guys need to learn how to read, the alert basically. Every alert doesn't mean just get in there. It's giving you the idea to either look at that ticker to see if it fits your category to trade. Okay. Um, it eliminates, you know, small percentage gainers like if you're trading, you know, something big like Tesla or something like that. Tesla has a lot of good range. That's great. But also too, I mean, who has $1,000 to trade, you know, one share of Tesla and make $10 when you could do the same thing with a smaller cap stock, and have much bigger moves and much bigger gains. That's what the purpose of this is for you to grow your account. Then if you later on want to get to playing with the, bigger cap stocks, you can. But let's just kind of focus on this. So when it comes to trading the alert, let me pull up one here. Let me pull it up here. So of course we had the watch list. So first things first, when you wake up in the morning, you should be having your watch list, however you want to have it. A key part to being able to decide on which stock I'm going to trade for me personally is having the ability to look at roughly 9 different stocks at once. Excuse me. Now, depending on the broker or charting software that you use, you're gonna have that ability to do that. Let me show you guys how I do it. Now, I have Thinkorswim as well too. Now, typically, I'm looking at maybe 5 or 6 different screens. Um, throughout the day. It's not required, but it helps. If I want to maximize my, time frame and just use my time efficiently, not be stuck staring and guessing at one stock. So with Thinkorswim, you can, have as many screens within one screen that you want. Me, typically, I'm having 9 different charts. I'm trying not to look at no more than 9 different charts at a time. Usually in the beginning, when I wake up first things first, I'm going to have my watch list tickers pulled up. So in this instance, when I woke up this morning, I had BBY, PIK, then I had JAGX, Fund, DWAC, VORB, and MIRN, all pulled up on these charts here. It's cleared now because I'm doing it on the main desktop and I don't usually trade on this desktop because I'm usually streaming it for you guys. But I just want to kind of give you an idea. So pretty much, you kind of get the gist here. Having all these stocks pulled up, no specific order, just as I'm looking at them, I'll type them in here and, pretty much view what I'm looking at. I'm just throwing these up here to just kind of give you an idea here real quick. So you can just kind of get the gist of it. We don't need to go through all 2, 2, 4, 6. So it's only a few up there. And even if, let's say if your watch list doesn't consist of filling all those brackets, you can change it to fill it, however much you want by just clicking on that clicking on the square box in the right hand corner of Thinkorswim in the charting tab, and picking out however many you want. But anyways, let's just kind of leave this up here for demonstration purposes. So I wake up in the morning, these stocks are already pulled up. How I need to, have them. You can set your studies and all that good stuff. I'm not going to go through all that. There's a whole tutorial on me doing Thinkorswim. Go back and look at that if you need to. But anyways, let's say I got it all pulled up. I'm looking at the charts. Now, obviously, all these charts are going to look different, right? So, me knowing my strategy, I know what I'm looking for. I could be looking for, a bullish flag. I could be looking for an ascending triangle, a descending triangle. I could be looking for a head and shoulders pattern. There's so many different patterns you can be looking for when it comes to the charts. Whatever it is for you, keep it that way. All right. So that's usually my morning. I'm looking at those. Now, let's say, it's bright and early in the morning. None of these charts look interesting. I'm not, looking at nothing. I'm just kind of waiting around. But an alert goes off. MIRN. I'm going to pull it up here on the chart. Typically, especially with pre-market, it's the first alert that pulls up. It's the first alert that goes off, right? Now, at this point, the stock is going to be running. So I have it pulled up here. And if I'm looking at it and I'm like, okay, chart looks good. It's just starting now to run. That's fine. Let's take a look at the stats. So you guys know I have, the platform that I'm going to trade on. I'm just using Thinkorswim to view all my charting. I'm not executing any trades on there, right? So I'm going to pull up Webull and I'm going to look at the stats on the stock. Sorry, I'm trying to get it all pulled up here. So quickly I'll go, and you guys see me do this a lot of times when I was, when I'm trading live with you and things like that. I'll pull it up here. I'll look at, my statistics. I'll say, okay, good float, good market cap, things like that that I'm looking for that you guys know that I look for in the trading course. That's fine. Okay, so let's say MRIN is going to be my stock that I'm going to focus on. I'm going to then pull up the chart and I'm going to look at, where it's at in the chart. Let me minimize this here so it's not confusing you. So pretty much this is the landscape you guys are looking at. Now, MRIN is my main focus. On my other screen, I still have those other, 9 stocks, just kind of looking at them, watching them, seeing if they're going to do anything while I'm also in MIRN. The alert goes off and I just pull it up. So that takes me about, what, a couple of seconds to pull that up. Let me get back here. Just kind of give me an idea. This is at like $4 and change when this thing went off. Pre-market. And have your chart set up to however you want to do it. So usually by then, it takes a few minutes and it's already spiked up, spiked up. Mind you, I tell you guys all the time, don't ch don't chase the first alert. Sorry, that's freaking Discord going off. Don't chase the first alert. I thought that thing was turned off. Let me make sure I close it. God, I hate Discord. All right. So yeah, don't chase the first alert because this is what happened. This is what happens. Some news catalyst happens. For example, they were awarded funding, right? Think about this. That alert goes off. You got buyers wanting to come buy the stock. And it could be hundreds, thousands of buyers coming in trying to buy the stock at this price because they initially thinking, oh, this thing is going to be good. It's going to go up in price, blah, 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 obviously. So that's when that initial first alert comes in and you see the stock shoot on up. Now remember, buy orders need to get executed by sell orders. Excuse me. Now, how the orders getting executed? The sellers that are orders that are getting executed are sellers who might have had limit orders already set, um, institutions, things like that. These orders got to get executed. They've been in the queue to get executed for a long time. They just haven't been because the stock hasn't ran to that price. Or and it could be new traders coming in, throwing in, say, hey, I need to sell it, I need to sell it. So that's what's happening with the first initial spike. The problem is that spike comes because a lot of buyers who are early in that are getting in onto that trade right away. So you'll see it initially go up. Now, this has caught the eye of people who are, trying to short sell, excuse me, who thinks the stock is crap. You got sellers who, want to pretty much bet against them, thinking it's overvalued, things like that. Those sellers are coming in, driving the stock price back down. Those orders had to get executed. So those buy orders are getting executed first. Now the sellers are coming in and getting executed first, which is why a lot of times you'll see the stock shoot on up, the moving averages move up, and it pulls the stock price up. Then the sellers are coming in next, and they're going to drop the stock price down. Excuse me. This process, guys, it usually takes a couple of minutes. This is how you're typically early to the alerts and stuff like that, okay? Um, because you're getting in on that, you're looking and seeing it during the first initial spike and the first initial sell. Old sellers are getting out, new buyers are coming in. So this is where you're seeing that level of support and resistance being set and take place, and which is why I tell you guys, wait for a level of support and resistance to be established. If you're looking at 9 different charts on here, you will easily see that after the first initial spike, if support and resistance is set. And if there isn't none set, the stock will just shoot on up and shoot on back down, which means no one really cares about it. This is why that first session of buyers and sellers is very important because this is going to set the tone for the stock for pretty much the rest of the day and carry over to the sentiment of how the market feels about it. Okay. Um, so yeah. So again, I have a strategy for this part that I trade. You guys in the course stuff know that how I do that, but that's another thing. Anyways, this is the safest way to do it. Wait for a level of support and resistance to be established. And this is why support and resistance is important because all those buyers and sellers within that frame are getting washed out so that the stock can do what it needs to do, whether it's going to be going up or going down. And it'll tell you right there right away. Okay. So let's say you got that pulled up. MRIN goes off. Now another alert goes off, PIK. At this point, whether or not I'm going to choose PIK to trade is going to be determined on a few things. If I'm already in MRIN, based on looking at the stats, volume is very important. Now, if you don't know, and you know what, I'll put this in the comment section of this video of the of what I look for. So once, let me backtrack. Once the alert goes off, I'm going to look, first thing I'm looking at, not only am I looking at the details of the stock right here, let me pull it up here. Not only am I looking at these details to see, if the float and stuff like that is what I want, blah, blah, blah. I want to look at volume. Volume is going to trump all things to me, okay? Um, if there's no volume, it doesn't matter. The spike can shoot up to $100. If only 1,000 shares traded, I don't care. I'm moving on, okay? I need to see, typically I like to see something in the beginning, in the morning. If the stock has more than, I would say on average between maybe 500,000 to a million in volume traded within the first 1 to 2 hours of pre-market, I'm focusing on that one. Okay. But Eric, how do I find out how much volume is being traded in the stock? Well, you can use the scanner settings that I have here. I'll put this in the video comments for you guys. I think you guys, of course, should already have it. I think if not, you can use it from this video. But you can check it this way. You scan it and you look in the volume column and you see I got mine sorted by descending order. So I can just look at the top few stocks and be like, okay, I'm going to pay attention to this one, and this one for the rest of the day. Now, it's not foolproof that just only those stocks will run. Sometimes smaller volume stocks will run, or have a little pop there and stuff will come in. But this will help me. This helped me keep my focus on stocks that are important at the moment right now. So this is one way to do it. Use a scanner and do it. Or another easier way is typically when we get an alert that comes in, guys, you'll notice a lot of times that will be one of the leaders for um, top volume for the day. And another easy way to do that is on Webull. If you're using Webull, if you click on the side here where it says markets, it'll be at the top gainers. So like for example, in pre-market today, by the time the alert went off, as soon as the alert went off, it's going to be one of the higher percentage gainers, and you'll see the amount of volume there too. That's like the easiest way to do it. Just pull up Webull, click on the markets tab, look at that alert. Is that alert going? Is that because it's going to be there first for the percentage change, but also look next to it for the volume amount. That's a good way to look at it. So that's how I able to decide. Okay, I might want to trade this because I know if I'm looking at it because of the amount of volume that's in there, other traders are looking at it too, which means they're going to have some kind of feelings towards the stock. All right, pretty simple. If PIK goes off and I don't see it jump on the high percentage gainers and the volume isn't where I need it to be, I'm going to keep on moving. Because sometimes it'll show at the top percentage gainers in Webull, but it won't have the amount of volume that you want. You'll see sometimes it'll be like, let me pull it up here. You'll see sometimes it'll say, oh, stock XYZ moved up 18%, but the volume in it is only like 2K. What am I going to do with a 2,000 share stock that's up 40%? It's nothing. So that's one of the main things I'm looking for. The volume isn't there, I'm not going to trade it. 9 times out of 10, especially in pre-market, the volume will be there, but look for that and make sure. Even if it's not there yet, it could be just the fact that traders haven't caught on to it. It may happen in opening bell where everyone's looking, oh, it's a percentage gainer, it gapped up, and they're going to come in and try to short it or even make it run even more. So I'll keep it on the back burner of the 9 stocks that I'm looking at for a while until it no longer catch my interest or another stock comes in and is alerted and it looks more interesting. So that's one thing there. Now let's take a look at the next stock that might come in. NXGL. So let's say NXGL comes up for one reason or another, volume spike, NXGL. I'm going to type it in on my little 9 charts and then I'm just going to watch it from here. Okay. That's it. Let me just put this in a minute so it looks easier. And again, my time frame is by the minute. You don't have to do it by the minute. Do whatever time frame you're comfortable with. But let's just say it spikes up. I'm looking at it. This is pretty much what happens, guys. And this is why it's so easy to pick and choose which stock you're going to trade. So NXGL announces the launch of medical, blah, blah, blah. Okay, perfect. And we talk about how it was IPO, and then it hit a market high of this 3737. Again, this is the first initial part of it. And if you want to get more detailed of it, you can pull it up on, on TradingView and look at it. And the more you do this, guys, the quicker you're going to be at being able to do that, which is, I mean, speed is great, but not necessarily depending on how you trade. So, anyways, it pulls up, right? The alert goes off, goes off. Oh, it's at 320. Oh, it's at 420. This is where a lot of you guys start to chase it. It's only been, sorry, it's only been what, a few minutes, 6 minutes since between like these two alerts. So at this point, a few minutes into the trade, you're only like right here, and at that point you're chasing. Now, unless you're doing the strategy that I talk about a lot of times, and of course, there's no reason to be chasing this. No support has been added. So if you do feel the FOMO kick in and you execute an order, understand that that stock is going to pull back. The problem is you don't know how much is going to pull back because it could just be a spike up and a spike down. This just means that there is more sellers and buyers, and the sellers think that is not worth, there's more guys that think it's not worth what it is. That's pretty much it. And that's exactly what happened here. See, spikes up. All those buy orders from people who are getting excited about the stock get in. And then guess what? All the people who've been bag holding, who thinks that this is crap news, are going to come in and say, sell it, sell it, sell it, sell it, get rid of it. I'm trying to get rid of this bag, blah, blah, blah. And guess what? Not enough buyers are convinced that the stock is worth anything. So the next go around, as you see here, nothing is going to happen with the stock. Let me pull this up here. And I tell you guys to do what? Wait until this position. This area, this pullback area is very key. I wouldn't have gotten this stock. I didn't get in the stock. The reason why I didn't get in the stock, one, because when the pullback happens and it's in bearish territory, meaning that it's below the volume weighted average price, bulls are not on my side. They're not going to help me propel this stock up. So why would I want to get into it? Bears are winning this. I'm not going to jump into it. Not enough people is convinced that this stock is worth more than $4 a share, right? And of course, you got these things that could tell, but I'm looking at level 2. I'm just kind of glancing over that. But anyways, it pulls back. By the time it pulls back, if this came back below the VWAP, next I'm moving on to another stock. I gave NXGL probably like 5 or 10 minutes of my time. I moved on. I can keep it on the back burner. That's fine. But if another alert comes through and it's more interesting, guess what? Typing that ticker in, and I'm putting it on here. And I'm going to pay attention to that. I'm not going to pay attention to NXGL. So that's the best way to do it. You're doing that process the whole time. BDGX comes in, or BJDX comes in, pops up. Okay, I'm looking at the stock. Great, it's running. Okay, perfect. Keep it on the back burner until it gets to the point where I'm ready to enter and exit. During that time, guys, you can start making your, plotting your levels of support and resistance, where you're going to get in, where you're going to get out, what you're going to look for in your indicator. Your mind is going to be doing that process the whole time while the next few minutes this thing is running, trying to establish some level of support. Let's take a look at BJDX. Yeah, I bet you guys thought I was just going to go over all the stocks that were successful and, the alerts that kept running. No, you need to see the ones that work and the ones that don't work. You're not going to become a good trader if you don't. And that's the purpose of this. So let's see this. BDGX goes off, pops up, brings back levels of support, establishes support right here. That's a nice little cup and handle, pretty decent breakout. But once it goes up, it's going down. So, excuse me, you can kind of plot this however you want based on your trading strategy. I'm not going to confuse you guys with going over that, but that's what I'm looking at. Now, at this point, maybe it would have caught my interest. However, you could have probably easily tell by level 2. You could have looked at the tape and probably seen sell orders coming through. knowing that this thing wasn't really going to run too much more. You know, um, that's why reading price action is very important. And again, guys, don't be afraid to cut your loss. Stock's not going anywhere that you anticipated. Just go ahead and get out. There's nothing wrong with that. Again, you could be wrong 7, 8, 9 times out of 10. That one time that you're right, that momentum comes and that stock starts shooting up, you're good. I mean, that's going to make up for the four losses you cut for 10 cents each. I mean, it's the difference between cutting your losses quickly because you know what's going to happen, and just cutting your losses be cutting your losses because the stock didn't go straight up. That's not how it works. Stocks go up and down, up and up and down, but they go up and down, up and down, up and down with movement going up or movement going down. Hope that makes sense. But anyways, perfect example right there. So that's another one. Then you got JAGX. Sorry. Let's see here. JAGX. Now, I know like the admins were kind of looking at that one. I was too, to a certain extent, but I know history of JAGX, and the longer that you're in stock, the longer you're in the game of trading, you're gonna start to learn how particular stocks act. It's almost like they have a mind of their own. JAGX. Okay. So this stock is it's a healthcare stock. I'm not really good with healthcare and biometa stocks, but I mean it's every person to their own. The admins will alert that. This thing usually stays within like a dollar range. Doesn't draw my interest. That's kind of like disqualifier number one for me. I really don't like trading stocks that are below $2. Rarely do I ever. So when you see the alerts go off and it's a stock that's like 90 cents or 85 cents, I'm going to tell you right out the gate, I'm not in that trade. That's just me. Um, some stocks are deliberately kept low like that for company reasons. God knows why. I guess it's more of appeal because it's a cheaper stock and you can buy many shares. It varies from company to company. But me personally, I'm not getting in a stock that's that low. That's just me. So something like that, I'm already going to disqualify it looking at. Um, Sorry guys, I'm getting messages. I'm going to already disqualify that alert. So I'm going to move on. Next alert, NXGL. Now guys, this is all happening within a few minutes. But again, as you're doing this, it's only going to take you probably a few seconds to decide whether or not you're going to get in the trade or not. Now, IMMX comes up. You look at IMMX. Well, first off, the alert goes off, right? You know what to do. I'm not going to pull up here. The alert goes off. Put it on the screen. Put it on that screen. It's going to be one that you're watching. Understand that you're watching it. The reason why you're just watching it is because you're waiting for it. You're waiting to see if it sets up. You're going to wait and see if it goes up and comes back down. So, that's what you're looking at. We're going to skip IMMX. We know that thing ran today. It was alerted. So I'm trying to find the ones that aren't doing anything. For example, another one that went off, EVFM. All right, EVFM. A quick spike up and a quick spike down. Oh, look at that. EVFM is what price? I may pay attention to it once it starts to get like to $3, but I'm clearly with something like that, you can wait for the alerts to tell you. The alerts will be like, hey, it's at $4 right now. It's at $5. Okay, then I might pay attention. But this thing is worth a couple cents. It ain't gonna go anywhere. So I'm already skipping that one, not paying attention to it. Easy. Let's look at the next one, ECOR. Excuse me, sorry. Throat was getting dry quickly. Was it ECOR or well, yeah, ECOR. I can't type. There we go. Oh, look at that. Another couple cents, disqualified. You see how quickly that went off? Because I have criteria that I look for with stocks. And it's nothing wrong with trading something like that. I mean, look at this. This was a good percentage gainer. I just personally can't trade that. You know, every trader, you got to know your strengths and weaknesses as a trader. That's why in that book, and I thought this was a bunch of junk. Not that book, but one of the books in the Learning Lounge talks about, being disciplined as a trader, knowing yourself, knowing your strengths, knowing your weaknesses. You won't know this until you practice it. Okay. And just because it didn't work one time doesn't mean it won't work all the time. You want to do it multiple times. But I know for a fact that sub penny stocks and stocks that are below my means of trading, I do horrible on. So I just leave them alone. Wait for the market to come to me. I'm not chasing the market. Now let's look at this. BNGO preliminary Q4 revenue, blah blah blah. Okay, that's fine. It's that's good news. BNGO, I've traded before, but that's not news or catalyst that I think is going to do anything great. It's good that I know that in the back of my mind for the day, because if it gets alerted that volume starts to come in, then I'm going to pay attention to it. Right now, this is just news to me, and I don't care. So I'm moving on. Excuse me. Actually, I'm not moving on. I'm still probably just looking at IMMX or something like, or NXG or anything that's going to, that's already fitting my criteria to make a move to where I need to get into the trade. Okay. So that's pretty much how that works. Now you're just doing that day in and, throughout the day. Let's say something like LIXT comes up. I've traded LIXT before. Let's see what it did. I'll pull it up on here, wait for it to hit my setup, which is my trading pattern that I look for. LIXT, pull it up. I know it never did, but I'm just kind of giving an example. If you wanted to focus on it, it hit your criteria. It had an alert. It had news. It has a catalyst. That sounds like a pretty good catalyst. Okay, I'm going to pull it up. Look at the chart. Is volume coming in on it? I don't know. Is the bars getting stretched out, or are we seeing price action happen with that? Is volume coming in on that red tape? Probably did. I don't remember because at this point I wasn't watching LIXT. I think I was in IMMX at that point. But anyways, from the looks of it, it wasn't much movement, which again is why you wait. As a matter of fact, let me pull this up higher. LIXT was at 535. Here's today. Yeah, look at that. Not much movement. So it's just sitting on the back burner, not paying no attention because no volume is coming. That's fine. All right, next thing. Now let's take a look at, well, BDJX hit another pre-market high at 327. Now a lot of these times, guys, with the alerts, it could hit the alert and that price movement of a new high could still be within that one range of the stock shooting up. Happens a lot. Did I type it in wrong? I did, didn't I? Excuse me. Throat getting dry again. So, look, we were just talking about this one. Yeah, so, I mean, again, you could have traded this because it went up, pulled back, and then broke. At that point, I probably would pay attention to it like, hey, oh, you know, cup and handle, it's fitting the criteria, great. I'd probably get in. If I was paying attention to it, I would have got in. I think I was in IMMX at this point. You guys can look at the Facebook group and see, but get in. Oh, it's not going my way. I'm going to go ahead and get out and take that L because it's pulling back it pulled back very quickly, and it had a lot of. You see these candles, resistance candles. You would have seen that price action coming in with orders coming in, pulling it down. So go ahead and get out. Maybe wait for the next round. Keep it on the back burner. The next round comes again. It gets blocked out again. After that, I'm done. Especially with that happening in pre-market, it's much slower. So you should be able to see those orders coming in and getting executed a lot easier than you would, opening bell and stuff like that. So at this point, yeah, I would leave this one alone. That's just how I would have traded it. But again, if you're a short seller, you probably could have, got some shares located and shorted that bad boy, profited. Anyways, that's how that went. Now let's take a look at OCGN. And I think a few of you guys asked me about this one too. Katie asked me about it. I think Amanda asked me about it. This video is going a lot longer than I expected. I'm sorry, guys. I'm really just trying to walk you through on the easiest way to look at these alerts and not be, stuck trying to, oh, do I choose this one? Do I choose that one? Do I choose this one? Do I choose that one? This one's going to help you out. And a lot of the traders might tell you trading pre-market and after hours is risky. Of course it is. It's less volume. You got to be more precise. Some orders might not get executed, but it's still opportunity there. What Webull platform makes it easier to do. I do it day in and day out. You guys see me post it all the time. So old school heads who don't have access to pre-market and after hours like that will tell you, oh, trading in pre-market after hours is just crazy. Whatever. Again, to each his own. I tell forex traders they're crazy, but hey, whatever. um, so OCGN had news about neutralizing the Omicron Delta variant. I didn't trade OCGN. I can't remember why. I think it just didn't. It wasn't enough price action for me. But when did this alert go off? 5:38. So like right here is when it went off. It probably had decent volume at that point, but it wasn't much running. Now let's take a look at this. 5:38. Okay. Let's say you got it pulled up on your thing. This is the way, again, this is how I do it. First time it goes off, I'm not going to pull up on my main chart. I'm going to pull it up on one of these, and I'm going to look at it from here. Let's say, oh, funds off my radar. It's not doing nothing. I'm going to pull up OC. I'm tripping. OCGN. Why am I typing in another stock? All right. So now you got that pulled up, and you're just waiting for your chart to come to fruition. Excuse me, at whatever time it comes to fruition, if it does. So you might be waiting for it to break a new high, et cetera, whatever it is you're looking for as a trader. But let's say you got that pulled up. Now it hits the point to where you want to actually trade it. Now it's time for you to execute your trading strategy. I can't direct you on how to do that. That just is going to be whatever you like to trade. But anyways, breaks a new high, 539, blah, blah, blah. It gets alerted. Excuse me, it gets pulled back, pulled back. Now, obviously, if you're a bullish trader, you see this. It didn't go too far past the VWAP, which is good. There's a level of support. Now you know at this point what does it have to do? The buyers that want to buy have to come back in and buy, but they're only buying at this price. So clearly that's showing you, hey, these guys don't think it's worth anything. Let me go ahead and get out. Why wouldn't you? Let's say, for example, if you were to get out right here, right? Pulls back, and then all of a sudden the stock shoots up again. Jump back in again. Better than you trying to wait and hang on for the stock. End up doing this. Clear sign. Clear sign. Let me show you. Clear sign that this thing was going to go bearish. I'm going to let you look at this chart for a second. Okay? Even if I eliminate this, all the stuff, you really could just look at two indicators and be able to tell that this thing was going to be bearish. And if you're a bullish trader, you should have got out. Go ahead. I'll give you a few minutes. Okay. So if you don't see it by now, right here, the EMA is crossing below the VWAP. Pure bearish sign. Just like the EMA crosses up over the VWAP, clear bullish sign. If you don't see that, if you don't learn anything else from me, from reading any of those books, understand that. That is how you know at this point it's going to turn bearish. I need to get out. This point is going to turn bullish. I can stay in. Trading is all about having the odds in your favor, guys. That is going to let you know that the odds are in your favor depending on the direction that you want to trade. Okay, so that's pretty much what happens. And remember, guys, these are all. And no matter how many charts you read, no matter how how many different sources of information you obtain, all of it's lagging information. Lagging. It's not leading. Just because it ended up one way doesn't mean it can't go another. This could have easily just crossed here, came down a little bit, and crossed back up. There's no way for you to be able to predict that by reading a past chart, which is why you need to learn to look at price action and order flow of the stocks that are coming in. Watch the spreads. Is the spreads getting tighter? Buyers coming in. If so, then hey, Looks like it's about to turn. Don't be afraid to cut your losses quickly. That's what they mean by cutting them quickly. Okay. So I think by now you guys probably get the gist of it. And this is just pre-market. I haven't even gotten to the next, throughout the day. Let's take a look at FATH. So let's say FATH alert goes off. Again, I'm going to pull it up here on the back burners just to look at it. Let's just say JGX. I know it doesn't hit my thing. I'm not going to pay attention to it no more. I don't care. Now let's look at FATH. Decent sized dollar amount, good alert. But I understand that this is the opening bell. Excuse me. That this alert went off. No, I did not trade FATH. I think some of you guys, other trading gurus, did though, and look what happened. I wonder how they did. I should probably watch something. I think at least 2 or 3 of them did that I know of. And I know you guys like watching them. I know you guys like following them because they have big money. They're taking big risks. You're not them. You don't trade the way they do. So stop trying to. Okay? That was probably like the 4-year mistake I had when I first started trading. I was trying to follow every YouTuber out there, trade the way they trade so I can get money like the way they get money. Nope, doesn't work like that. If anybody's going to tell you, I'm going to tell you. So understand that. So anyways, FATH went up. The alert went off because it broke. It was trending up high all day. That's good. It broke, pulled back, broke up again, resistance, came back down. Now the market was green. Understand that, guys. It was green. It wasn't like super green, but it was green. And you can tell that when the opening bell happens, if a lot of stocks are moving up, if it's going to be a pretty green day, but it can also quickly turn. However, price action will speak for itself. Too much resistance here. And ideally, you could probably think, oh, this right here was a dip. But then you got a second candle on the green. That means, and it's starting to light up. That kind of gives you an indication that it's going to start to pull back a little bit quicker than you thought. Quick fake out, breakout. Now it tries to pull up again, which is good. You might want to hold on, trying to be greedy, like, oh, it still has more room to run, more room to run. But then you see these orders getting eliminated, the buy orders getting eliminated, and the red candles start to come in. Then that tells you right there that second try was too much resistance. So, anyways, FATH, that's how that went. Let's see, was there anything else? I mean, AEI had some news, didn't really budge. FATH moved again. That was a second alert. Look at it, all that happened. 2 more alerts came in within that time frame of this happening, which is why you just put things on the back burner and wait for your setup that you trade. All right. Then we all know how Vine went. Congrats to some of you who might have traded Vine. I did not. I pretty much called it an early day, honestly. It wasn't too much to interest me. This thing spiked up, consolidated. Look at that. See, it spikes up, consolidates, holds support right here. Excuse me. It holds support right here. It has to eventually turn. You're just waiting on it to turn. You're waiting on that moving average to turn. By the time it turned, this thing was already in bearish territory. Probably another reason why I didn't get in this trade. I think I was looking at it. Look at that. This right here, again, it's showing you. Boom. EMA, the 9 EMA is crossing over the VWAP, which is showing you, hey, I'm going to be bearish for a while. Oh, you want to be bearish when you're showing levels of support? That means, okay, I know what that means. Still never crossed. Still never crossed. And if you would have waited all day for this thing to cross and break another high, you'd have wasted your whole day, which is why you wouldn't have had it on your main chart. You would have had it on your back burner because you would have been looking for the pattern of it to cross and break another high. When you see this, guys, understand this. It's not going to, if you see a pullback, especially after the second part of moving average convergence divergence, you see that pullback happen, unless it breaks, unless the EMA and the VWAP crosses again, is not going to break that high again. This right here is kind of like a common sense thing. Shoots up, and at this point, if oh, it's alerted $8. Oh, it went to $8.60. Oh, went to $9. You're still chasing. Because I guarantee you now, these people here are bag holders. These are all bag holders. Okay, that's why you need to wait for that support. But again, you're chasing it at this point. You know you're chasing it because you got it pulled up and you see there hasn't been no pullback yet. You saved yourself some headache because you waited for support. You had patience. You waited for some support to show, and the support never came. It just kept on supporting. Okay. But anyways, this is what I mean. So it shoots up, shoots up, shoots up, and it begins to pull back. When it pulls back, the EMA and the VWAP crosses, and it comes down. It cannot break new high until that EMA and that VWAP crosses again, which it tried right here. Didn't happen successfully, but hey. All right. So that's pretty much how I play the alerts day in and day out. Um, Once you know to look at this stuff, guys, you really, honestly, you wouldn't need to be behind a computer that much. I mean, I'm usually there for just, arbitrary purposes, I guess. But, you know, I do it a lot of times from my phone. I just, alert goes off, pull it up on Weibo on my phone. I'll look at the Weibo shows you the whole chart on your phone, which is pretty cool. Especially if you have a bigger phone. I have an old iPhone 6S. I don't even have the latest and greatest. I'm sure if I had like the 13 or something, it would look much better. But, I pull up on the phone, looking at the volume, seeing if it's there. Because this alert can go off 1,000 times, which a lot of times it will, saying, hey, new high, new high, new high, new high, new high, new high, new high. But there hasn't been no pullback yet. I'm not going to get into it unless I'm doing that one strategy that I tell you guys in the course. But that's pretty much it, guys. You're doing that day in and day out. Eventually, you'll find something that hits, your trading pattern that you're looking for. If not, just move on, sit on your hands, wait for another day. All right. But anyways, guys, that's just a quick little recap there. I hope this helps. Um, Let me know if you have any questions in the comments, or message me. Might be easier to put it in the comments. That way, you're helping out other people who might have the same questions as you. Okay. Overall, pretty decent day today. Can't complain. I'll get to work on this watch list for you guys. It should be out shortly. Um, but yeah, if you're not subscribing to the YouTube channel, guys, you probably will want to do that. I'm not pushing you to do it, but or just keep checking back to see if I'm posting something new because I'm gonna try to do this a little bit more often once the sickness is over with, to help a lot of you guys have a better year. I want 2022 to be a great year for all you guys. A couple hundred of you guys that are watching and waiting. Um, so yeah, like it, subscribe, blah blah blah, do all of the junk, and let's keep making money. I don't have a set schedule. I'm not like again one of the trading gurus who does it every day and talk about the same nonsense over and over. I usually want to touch on things when I get like a lot of people ask me the same questions. It's much easier for me to directly talk to you guys, one on one, than it is for me to keep putting out videos of the same thing over and over. Because each one of you guys have individual issues that you need to work on with your trading, which is fine. Every trader's like that. It's better to have another set of eyes helping you as opposed to trying to learn it on your own. Else it'll take years. Trust me, I know, to do so. And I know a lot of you guys don't have thousands and thousands of dollars to just fork over to some trader to teach you something you can, easily learn in a book or just kind of learn from experience. Um, so I try to give you, a little helping hand whenever I can. And no, I don't charge for that. So I should, but anyways, yeah. And then, the alerts are there to help you guys find the trades that you need to find throughout the day. While everyone else is chasing Apples and Teslas and Microsofts and Roblox and IBM and all those other big trades for big billions of market cap and not much movement, we're in here grabbing 30, 40, 50% gainers really easily. Momentum trading, guys, this is what we do day in and day out. The more you practice this, the better you get. Trust me, it's worth it. But yeah, so again, keep watching videos. I'm going to put out some more instructional videos. You guys, wanted to learn a lot more things that might help you with your trading. It might not, depending on how you trade. That's the reason why I don't have like a bunch of those videos showing you how to do this and do that because everyone's different. I'm not going to cover every single thing in the market because there's a lot to learn. But of course, too, the more you learn, the better you can look at things and be able to say, this doesn't fit me, move on. All right, cool. So with that being said, you guys have a great day. It is Wednesday, the 12th. Um, and we still got 2 more days. So you guys stay green. Let me know if you have any questions. Share this video, like, comment, subscribe to all that good stuff to help other traders who want to trade but don't have the ability to trade to have the ability to trade. All right, take care.